Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, October the 30th, the year 2018. Let's talk trading. Mistakes or lessons? When you put a trade on and your stop loss gets triggered because we all know you're using money and risk management and your stop loss is in place, do you consider it a mistake? We've talked about this before, but it's a subject that keeps coming up because a lot of traders have trouble with taking a loss. For some reason, traders seem to think every time they put on a trade, it's going to be a winner, or at least a lot of them do. And then you take a loss or you add to the loser and you get wiped out and you get frustrated and mad and you try again and you do it again. Well, see, if you keep doing the same thing over and over and expecting a different result, well, we know what that's called, right? Crazy. Didn't I think everybody says Einstein said it, but I think it's truly somebody else. I think you can Google that. But anyway, the point is, it's not necessarily a mistake when the trade ends in a loss. Now, if you really want to take another step and get a little bit deeper into it, you see, you can make a lot of mistakes. You could be impatient. You could airball the trade. You could just put a trade on when not all the conditions, all your triggers were lined up. You think you want to get ahead of the game. You want to get in a couple of pips, you know, early and make that much more. You could just make a whole bunch of errors like that. Not put your stop loss in the proper place or not put it on at all. You could have, trade way too heavy for your account size. You could do all of those things, make every mistake in the book, and that particular trade could come out a winner. And on the other hand, you could do everything right. You could have your trading plan written down. You have all your triggers, your indicators are all lined up. And when you get that go signal, you enter, not a second early or a second late. You do it at the proper time. And that trade could wind up a loser. So you could see that it doesn't really matter on a particular trade, anyone. Now, over the long haul, if you do a bunch of things wrong, you make these mistakes, all it would take is one trade and it could blow your account. But if you do everything right, you're going to take your lumps along the way, but usually after, 100 or 1,000 trades, you're going to wind up ahead of the game. So you have to you don't want to look at an individual trade as anything other than just a trade. Maybe you won, maybe you lost. But what you want to do is you want to look at the last 10 or the last 50 or the last 100 trades and see, did you make any mistakes? And what lessons can you learn? So you might be doing a particular method and you see that, if you do it, early in the trading session, you win. But if you continue, say 5 hours later, then you start losing. Well, you see, is that a mistake or is it a lesson? I would say it's a lesson because you look at it, you go, hey, after a certain point in time, I'm not winning as much. So let's not trade during that time. Let's trade when I'm winning. So let's go ahead and look at the charts. And once again, money and risk management. We got one more day left in the month. Tomorrow, Halloween. As you can see here, we're 151 pips off that monthly low. We're back into the lower wick zone on the previous month's candle. Weekly, you can see here we came out of that lower wick zone at the 127.50 mark here. That close was 127.51, and we're about 62 pips above it. So if anybody took that wick zone exit on the weekly, you can see there's plenty of pips in your pocket. And looking at the weekly gap, the Euro New Zealand is still not filled, and New Zealand CAD still hasn't filled, but the rest have filled. So we pointed this out past couple of days. Whether or not you took advantage of it, that's on you. And on the daily, you see here, we exited that lower wick, but it was only a couple of pips, and we exited the upper wick. I'm good for about 20, and we're in the previous day's upper wick zone. Only a 70 pip range. You could see here dollar yen 67, so euro yen's unperforming in relative to dollar yen, and we only have 1, 2, 3, 4, 5, 6 pairs over 100 with the new beast 241, but pound yen only at 94. Buy zone trade, you can see here it took out the pivot, but the pivot was within the buy zone, and that makes it relatively a no, I guess, trivial. It's like you just take that trade off the table. I mean, you really want to just go for the 3 pips or 2 pips? Yeah, you could. It's pips, but as far as a bias, if it's within, the 10 pips plus or minus open plus or minus 10, just pretty much renders the pivot useless as a bias indicator. But you can see here we had one trigger out of the buy zone and money to be made. And right here, you can see the rat zone, nice upper rat zone trades. We had a couple of them here. You see, you got back in the zone, out of the zone. Price usually doesn't like to close within the rat zone. And once again, we saw the pivot, pretty much pointless. We're right here at the weekly pivot. You see here, we started the week down here, and we went and we took out the weekly pivot. And we took out the that pivot here that didn't get hit. See, that got taken out. So now we're back to just 2 missed pivots. Price action. We had a 1 ball there at the bottom, green at the line, red ball at, or sorry, 1 ball at the top. And we've got red at the line, 1 ball at the bottom, green at the line, 3 ball at the top, red at the line, and so on. Now, usually, once again, just to make it clear, usually if you have a 1 ball here, or in fact you had a 3, well, 3 is kind of different, but a 1 ball, you want that candle to close and then you take it at the next line. So people say, well, why didn't you take this trade? Well, that's not the way this method works, but you can change, you can make your own method. These methods are not necessarily carved in stone. I mean, you can adapt them to what you see. That's why one of the first things I started saying when I came online was you trade what you see. You can't see it, you can't trade it. And seeing is not necessarily with the eyes, but with the mind, because that's where the sight actually happens. And here we go with the 5 lines from the previous day. I use these lines a lot. These 5: the high, the close, the mid, the open, and the low. I use those lines a lot to gauge where price is, and then I like to trade those lines. You can see here there's a lot of chop, taking just a few pips at a time. No reason not to, right? But when you see this start to happen, price is kind of range bound, and so you be quick to take profit. And wick zone. There's a few traders, I guess, want me to dive into the wick zone a little bit more. But basically we're using those same 5 lines here. This is the previous day's midpoint. But the statistics show that price usually will close outside of a wick zone about 70% of the time. Very high probability. Price just, and you can see here, came into the zone, out, in and out, in and out, in and out, right? In and out, in and out, in and out, and we're back in. So we're looking to come out. We saw that earlier with the monthly and the weekly and the daily, and this is a daily wick zone. So, that's just how it works. It's not very difficult. And if you put the trade on here, well, your stop loss is right here. You basically stop and reverse. That's what you want to do. Now, some people, and one of the other wick zone indicators I wrote, and this is the old 2014. It doesn't even say wick zone, high, top, bottom, low, because that's the candle. The high of the candle, the top of the candle, the bottom of the candle, and the low of the candle. But we just started calling it wick zones because it's a lot easier to say HTBL, right? So this is once again a statistical trade, and it's basically a breakout trade. And here that's a breakout, and then here once again it's coming out of the wick zone. But this is our 1 hour candles looking on the daily wick zone, but you can even see here, even on the 1 hour, you see here price entered the wick zone and came out. Price entered the wick zone, came out, entered, out. You can see here, even on the hourly, how price just exits the wick zone. So you see here, it went in. I think it actually popped out of there, turned around, exited the upper wick zone, exited the lower wick zone on that candle. So you see here we had a close inside the wick zone, and here we had a close out. And when I'm talking about the hourly wick zone, you see close in the hourly right there. And you see on this hourly we had a close outside. Price usually doesn't like closing in the wick zone. And holo from the get right here, highest open, nice trade, boom, 20 pips or more. Inventory reduction bars, you can see we had a short here, long there, we had a long back here. These lines are still active, so here's a short trigger, and there's the long trigger if you're trading inventory reduction bars. Once again, upping it to the daily, weekly, monthly, open, high, low. I guess I could even put the previous mids here, but I didn't. But you can see here, once again, price action around these lines. Since I opened the chart here, you can see we had the bid came above the valley of the ask and continued up. Einstein line, you can see here, once again, a lot of price action outside of the line, just taking a trade, sometimes a little, sometimes a lot, but this is all relative to when I open the chart. So, fellow traders, I hope that helps you. Remember, mistakes or lessons. You can win making mistakes and you can lose doing it right. So, make sure you analyze that properly, because in the end, it's not what you trade, it's how you trade it. So get out there and drain the banks.